US oil is a very complicated yet highly profitable market to trade as compared to a lot of other pairs out there. But it could be one of the most difficult things ever to try on because it can easily help you blow your account if you don't know the right way to approach it. That's why in this particular video, I'm going to share with you a step-by-step guide on how you can actually trade US oil profitably. What I mean is that I'm going to share with you both the technical and then the fundamental analysis aspect on how you can actually navigate this market profitably. So with that already said, and without taking much of your time, hello guys, if this is your first time on this channel, welcome to Perez Trade. On this channel, I mainly focus on how you and I can make money trading the crypto, forex, and stock industry. So if you think you need more videos like this and you like to be among our community, then consider doing the YouTube business by smashing on that subscribe button, turning on the bell notification, and also don't forget to join our Telegram channel whose link will be down in the video description. So with that already said, let's get straight into business. So hello guys. Now that we're on my computer, I'm going to take you straight and I share with you a simple approach on how you can actually trade US oil. So sorry, I'm in a gold trade right now. It's actually a trade I took on gold earlier today, though I already got out at this point here. I already got out when the market got here, so it's not really necessary anymore. So let me move over to the pair we actually want to talk about, which is US oil. So US oil, recently I came across US oil, and trust me, I've been really grinding the market because I really see it to be highly profitable due to the high price involved in a single pip movement, and that's why I really love it. And before I even got into it, someone requested that I do a video on US oil, on how he can actually trade US oil profitably. So now, before we jump into trading US oil, here are some things you need to know about the market. US oil doesn't have any unique strategy you use in trading it. Yes, there's no unique strategy you use in trading US oil. The same strategy I use in trading things like gold, US 30, UK 100, and then the XDY, and then also same strategy I use for my cryptos. You can see this was the trade I had on the XDY. So same strategy I use on cryptos, forex, the same strategy I use across every single market I go. Same strategy I've used on Euro USD today that I can see that it's also going well. So I would like to clear your mind that there's no unique strategy to this. The same strategy I've been using across different pairs that I'm also going to share with you in this video. The only difference is that both of this market, like the forex market and the oil market, have two different things that actually moves them. That's why you need to focus and make sure that you get something out of this video. So now let me go back to US oil. So I actually break down all my trading pairs like this. Now back to oil. Now, when it comes to trading oil, I also apply same support and resistance and trend line. And now here are the rules when it comes to trading oil. Let me write down the rules for you. The rule number one when it comes to trading oil is simply only follow the trend. So now when it comes to trading oil, the rule number one is that only follow the trend. Only trade to the direction the market is going to. If you see that the direction has gone too far, then that's where point number two comes from. Let me write it down. Only follow the trend. So when you follow the trend and you see that the trend has gone maybe probably too far and then the momentum is becoming weak, that's why you consider reversal. So the point number two is simply look for reversals. So let me go back. Oh, what am I typing? So look for reversals. So now when trading oil, the first thing I advise you to do is that only focus on the direction of the trend. But in a scenario whereby the trend has gone for quite a very long time, then you could be focusing on looking for reversal opportunities to get into the fresh trend, because the oil market moves from trend to trend, and I'm going to show you right now. Now, after looking at the market direction, either considering you want to follow the trend or looking for a reversal pattern, the next thing I do when I'm trading oil is that number three, identify support and resistance. Now here's why support and resistance is very important when trading oil. The reason why support and resistance is very important is that oil is not a currency pair, but it's actually let me say it's an energy. And most of these pairs like gold, oil, US 30, most of this one that has to do with stock and other stuffs, they are often traded from range to range. What I mean from range to range is that they are only traded from let me say key zones to another key zone. Like for example, if you even look at how the price chart has been marked here, you can see that 68, 67. So they only deal with solid numbers. So now when trading oil, this is one thing I also look out for. I always look out for the next perfect number that the market is going to when I'm trading the trend. If it's not close to a perfect number yet, I'm very cautious to see what it does when it gets there. And when I'm marking my support and resistance level, I only focus on solid areas, and I'm going to share them with you in a bit. And now, the fourth thing is that always check the news. Now, this one thing a lot of people overlook that I see that actually put them in a lot of problem when they are trading oil. When you are trading things like oil, always check the news. The reason why you need to always check the news is that, like for example, let's talk of US oil. When you are trading US oil, what are you doing? You are literally trading WTI crude, which is crude oil, against the US dollar. Now, any negative or positive news on the US dollar is actually going to affect it. And now when you are trading US oil, you are not trading general oil, but you are trading the US oil. So now news is highly important when you are trading this market. So after I do all my analytics, before I click on that buy or sell button to confirm my trade, I go and check the news. Like for today, let me say today we have some few news coming up, and you can see them here already on my trading view chart. So you can see job openings, which is a very high impact news. That's why it's been marked with red. And I also have another one coming up again, which is ISM service PMI. So all these news, you can go check them out on Forex Factory by going over to your browser and then just type Forex Factory. And you're going to, so for example, let me just type in here Forex Factory. So here's the website I normally go for my news. I'm just giving you all these things at hand so that when we get started, it becomes quite easy for you to actually follow up. So now here you can see that we have two news coming on the US dollar soon. Here is the first one, and then here is another, and then we also have a tentative news, which is news that I often like avoiding, the tentative news, because it doesn't have any specific time that the result comes out fully. So now if I want to trade US oil, I'll be very cautious of this news. So after doing my analytics, it's either I wait for this news release and then follow the direction of the news, or I'll enter the market in the following price action, and when the news is about to be released, then I'll close the trade. Like for example, if I look at the time here, it's currently 10 a.m. in Ghana. Now, if I should enter this trade right now, the news is coming out by 2 p.m. Ghanaian time, which is 3 p.m. London time. Now, what I'm actually going to do is that if I should enter this market right now, by 1:30 Ghanaian time, I'm out of the market. The reason is that that space of 30 minutes before the news, a lot of things happen in the market, a lot of manipulations goes on in the market, a lot of pumps goes on in the market. We should always make sure that you need to avoid at all costs. So I'll always get at 30 minutes prior to an high impact news, and then look for an entry opportunity again when the news is over. That's simply how I trade when there are high impact news in pairs like gold and oil. Now that you've gotten that idea, now let's face the market and let me share with you my simple way of actually analyzing this pair. So you can just take a screenshot of everything on your screen right now. Only follow the trend. But if the trend has gone too far for maybe weeks or months, then you could be looking for reversals, and when you realize that the trend is becoming weak. And number 3, identify your support and resistance area, because they are very important as well, as oil is an energy that will always likely trade from one price point to another. It's either it's being sold for $70 or it will be sold for $71, so it's always move within this range. And then always check the news as well. Now that is it. So let me just delete it off and then reset my tab. So now that I've given you the whole scope of actually trading oil, now let's look at the market and then try identifying some support and resistance area with the current market position before we consider doing some back testing. So for that, when I want to analyze oil, here's where I start from. I start from the weekly time frame. Now, why am I starting from the weekly time frame? The reason is that this sort of market only reacts most cases based on what happens on the monthly and then the weekly time frame. Like, they are more moved by what happens on the higher time frame. Now, for example, let's take a look at US oil. If you look at it on the monthly time frame, what do you see here? On the monthly time frame, we can clearly see that the market was an uptrend. Let me give it a different color, and then because the market was an uptrend. Let me get my path drawer. Okay, because the market moved on an uptrend. Now we have a pullback, went back, came back to retest here, came back here, came back here. Now on the daily time, on the monthly time frame, we see that the market's an uptrend, but from where we are seeing right now, the market is currently ranging. So now when I see oil in this sort of condition, One thing I'll do on a monthly time frame is that I'll just get the areas whereby the market is currently ranging like this. Now, as I already said, the reason why you need to check the higher time frame for this market is that this market is highly more detected by what's happening on the higher time frame and news. So if you think you want to go and trade oil on the lower time frame, it might be good. Yeah, personally I scalp it on the 5-minute 15-minute time frame, but as a beginner it's not always advisable because anything in the market can just spike you out if you don't consider the higher time frame. So as usual, as I already told you, I'll be using my same top-down analysis strategy that I use for all my other pairs. So now let's look at it. Okay, you can see that the market, even here, the market is ranging. So now what we are looking for is that I'll be making my final decision on this market based on what I see on the 1 hour time frame. I'm not going to go below the 1 hour time frame for a better trading opportunity. So from here on the weekly time frame, it's still the same ranging area. And then looking at it on the this thing on the daily time frame as well, we can see that it's still ranging, but within this ranging area we can still get that this area that the market is trying to respect. Now you can see the market is creating this minor area here that is currently trying to respect, because I'll be making my final decision on the 1 hour time frame. Note, I'm not a swing trader, I'm an intraday trader, which is a day trader. So most of my trades are day trades, so I make my final decisions based on the hourly time frame, which is a 4 hour or 1 hour time frame. What I get from there is what I trade. So, but as a beginner, I advise you always consider what you see from the higher time frame. So now here's the 4 hour. Here's how the 4 hour is looking right now. And now looking at this market right now, on the 4 hour, we can see that the market also have this previous support area that it has broken below. You can see it right here. So after this, I'll come down to the 1 hour. This is simply how my trading strategy is. Nothing complicated. I don't stress myself identifying a lot of bunch lines. So now what I'll be looking for here, based on how I trade and based on how this market is moving right now, is that I'll bring the help of what I call the Maxidian indicator, and I'll see if there's still high selling momentum within this area. Now within this area, since I'm not seeing any high selling momentum anymore, I'll be waiting for this market to come and kiss this area, and then okay, let me increase the size of this a little bit. Okay, it's bold enough. Let me give it a white color as well. So now based on how I trade, looking at the 1 hour time frame, what I'll be expecting is for this market to come here, give me a bounce off, then I'm going to take a trade from this point like this. Like that is simply how I'm going to trade. I'll just take it like this and then aim for this nearest area. And then with my stop loss, when I'm trading this market, I always use a decent stop loss position for security reasons. So I'll just keep my stop loss currently somewhere below here, and then my take profit here. I don't wait for a 1:2 in oil market. The reason is that the market is highly volatile. The reason why it's highly volatile is because like what I mean by highly volatile is that it's not that this market will move like good. No. This market moves really gently, but each movement on this market actually costs a lot. So that's why I don't wait for a 1:2 in this particular market. Because one thing that I see that a lot of beginner traders actually find difficult in making solid profit is that once they hear this idea of a risk to reward should be 1:2, they often think that, okay, so since within this area here right now, the only way they can get 1:2 is by probably keeping their stop loss this tight instead of extending it. But in my own scenario, what I do when I'm trading US oil is that I make sure that I give my trade a very solid stop loss position. The reason for this is that when I'm going for US oil gold, I don't use higher position sizing unless I want to scalp. Like for this particular trade right now, it won't be a scalp trade. I might hold it for maybe up to 10 hours plus. Yeah, I might hold it for up to 10 hours plus. So it's not a scalp trade. So I'll use a decent stop loss position to make sure that the market don't kick me out immediately. Now, once I'm using a decent stop loss position, one thing I'll do is that I'll make sure that I'm not using a higher lot size. So I'll use a smaller lot size just to make sure that what, even if I lose, I wouldn't lose any huge amount of money. I won't use my usual lot size of 1 lot, 2 lot, 3 lot, or 0.5 lot. I'll go a bit less to make sure that I'm getting a good position out of the market. That's one thing I always do when I'm trading US oil. So as I already said, there's no unique strategy to trading US oil. The same strategy you use for every other pair that you also apply when trading US oil. Like same strategy, everything is the same. You can see, if you look at my good market right now, you can see that it's the same thing that I have here. I only have lines draw here. I don't draw any complicated thing or fill my chart with any heavy lines when I'm trading. I just try making it as clean as simple. If I'm adding any more indicator at all, it's nothing more than the exponential moving average that I normally use. So where is it? Exponential moving average. Let me just search for it. So the only thing I'll add in this sort of scenario is just the moving average. And then when I add a moving average, I'll set it to 100 days moving average. Yeah, so I always prefer the 100. The length should be 100. And then I just give it a better size. Then I give it yellow color because I'm using a black. Yeah, this is simply I just look at it when I'm trading gold and US oil. After I draw this my lines like this, I know that okay, each of these points are key levels, so the market is always likely to bounce off the line. For example, take a look at gold. Here is the reason why I mark that particular point here. Here is it, and you can see that the moment gold got here, what it bounced off it immediately. This breakout here was as of a result of news yesterday. That's why we had this breakout here. Like, my strategy is pretty much very simple. I just draw the key levels in the market, my support and resistance areas, and once I have my support and resistance areas, that's why I don't stress myself again. You can see the same thing I did on Euro USD that is currently moving. In case you are not in my Telegram channel, you can go check it out. You can just join using the link in the description. Join my Telegram channel. You are going to see that I actually dropped this signal out there. You can see it was a limit order we sold at this very point here. You can see so far the market is going well. So when it comes to trading this, I always advise that don't let anyone deceive you that there's a unique strategy for every single market. The only thing that differentiates each of this market is this thing. I would say is this thing you implement. The concept you implement, that's what determines how you trade each of these markets. So for US oil, my main impact when I'm trading US oil is that my main eye is on the news in most of the cases and following the trend reversals. So like for example, if this market gets here and then bounce back here with an engulfing candlestick closing this particular one here, I'm going to get in immediately. So now with a lot of talks, let me actually give you a backtesting result to prove it for you. So now let me take a test using my own strategy, how I normally trade any particular market at all. Like, I don't have unique strategy for any market. The only thing I have for every other market out there is unique rules for every other market, but my strategy remains the same: either breakout, pullback, or nothing else. So now here's US oil on a weekly time frame. As I already told you, when it comes to US oil, I consider my time frames from the weekly time frame. So now once you look at this particular time frame right now, taking it a bit backwards, one thing you can identify here is that the market had a serious upward surge around here. Now before the market broke below it and then it started fluctuating within this area here. So now once I identify this on the weekly time frame, the next thing I want to identify is that after that area, what else is happening now? Now we can see that the market is on a downtrend on the weekly time frame. You can see the market is now on a downtrend. But then if you look at this downtrend carefully, you realize that the market is currently a bit above the 100-day moving average that we added to the chart. So now if the market is above the 100-day moving average, that tells me that there's some bullish momentum coming into the market, so I had to be careful with my trade. So now after this, I don't trade the weekly time frame, so I'm just going to jump over to the daily time frame to go see what is happening on the daily time frame. And now when I come over to the daily time frame, I can clearly see just one simple thing: the market is currently above the 100-day moving average and it's one solid above it. Still, I'm not going to enter. Now at this point, this is where I start getting my support and resistance level and my supply and demands. So firstly, I'll get this low here. I'll mark that one, and then I'll mark this overall high here, which is this area here. I'll mark it out, and then I'll also identify within this area where the market broke above the 100-day moving average. Now here is my trade in this market. I have two trades in this market right now that I've actually marked out. Now once I identify this is simply how my setup is. I simply focus on the recent part of the market, get my areas like this. This other part here, this okay, good 15 cross. So that's an alert on good. I'll focus on that later on. So once I have everything marked out like this top over here that you see is where I'll be looking for a possible extended take profit position. Like for example, if I say the market is riding in profit really fully and hasn't given me any reversal, then I can be expecting a take profit around this area here or above. But for now, let's focus on what we are actually seeing here. So looking at what we are seeing here on the daily time frame, this shows that there's some buying momentum in the market. And let's go back to the 4-hour and see as well. Here on the 4-hour, it also shows that there's really a good buying momentum in the market. And the market has broken above this recent all-time high, and it's coming back to retest it. Now what we are looking for is that I'll go back to the daily time frame, and then I'm looking for this market here to come back here and then give me a push above it. Then I'm going to place a buy order, just as what I did with Euro USD today. I'll wait for once the market closes bullish above this particular point, then I'm going to enter in for a buy. So for that, on the daily time frame, I'm going to use my trend drawer to actually mark it out. I'll just mark it out. Now the reason why I'm considering a buy on this market is simple. On the weekly time frame, we see that the market is a bit above the 100-day moving average, which shows that there's some buying power in it. And now looking at it over here on the daily time frame, as well as the market is fully above the 100-day moving average, which shows that there's really a good buying momentum. And considering the fact that the market has broken above the previous resistance area, that alone tells you that there's more buying momentum in the market, because if there wasn't enough buying momentum, the market wouldn't be able to break out of it successfully. So now, since the market has broken above it, we are not in a hurry to actually get in, because when I'm trading, I always put a lot of hopes on what I call retest. So until I get a perfect retest on a zone, I actually don't do anything with it. And for this one, if you look at it right now, the retest is actually coming back here. So now once I see market like this, what I do is relatively simple. I'll set a limit order at this top here with a very good stop loss position that will be below here, and then I'll just aim very high for my take profit. Now I'm aiming high for my take profit doesn't mean I'll have to wait till the market get to that very high. The reason why I'm not waiting is simply because we have a minor area of supply here, which means that if the market gets here, there's a possibility that it's going to return downwards. That's one thing I actually do when I'm trading. I always mark all these minor areas in the market to make sure that once the market get there and then I'm seeing some funny reversals, I just get that. One thing I always tell people is that it's better to have a profit than not have a profit at all. So I always look out for that to make sure that I protect my positions. So now after this set, I'll just leave it. Since the markets are above the 100-day moving average, broken the resistance area, now I'm waiting for the retest and then a bounce off to where we set our limit order. I don't have anything doing in the market again. I just let it play out. Okay, you can see the market fell back in and then bounced off immediately. That's why when I'm trading pullbacks and breakouts, I don't go aggressively. I always wait for a successful confirmation before I make my move. That's why in my other video that will be tagged in this video, specifically, you can check below this video for it. You're actually going to see some videos that I've tagged on breakout and pullback trading, because I mainly trade breakouts and pullbacks. So you can go check those videos and you are going to understand more about the strategy I'm using in this particular market. Like you can see, here is a trade, the trade I took on gold. I told you earlier on, closed at $258 profit. I dropped it on my Telegram channel, and then I give them signals for 100% free. So if you need signals, you can also come and join. I give signals for 100% free over there. So from here now, I'll just let it play on. Now you can see that the market starts to take profit one right now. Now within this area now, I'll be highly considering all this candlestick you are seeing here. So if this particular candlestick I'm seeing here closes bearish below this area, I'll just close my trade and go out. But if it doesn't close bearish below it, I'll still keep holding. So you see, immediately that bearish close below it, I'm out of the market. That's simply how I trade this US oil. The reason is that this market, they move really fast, and it has a very good profit ratio for every single movement. So for example, if I had said my stop loss position is $100, I would have made pretty much $133, which wasn't much, but it's still better than not taking profit at all. So you see, straight to stop loss. This is simply how this market moves, and that's where the market is right now. So now where I am right now, I'm waiting for this market to come here, and then this candle flips back bullish. Then I'm going to buy with that particular candle, considering the fact that it just took out a previous key level. So this is simply pretty much how I trade on this market. I always put my eyes on the previous key levels, because whenever the market gets to those key levels, there's a higher probability that this particular US oil is actually going to give you a serious reversal. And once this candle prints any sort of high momentum candle, it follows this to as far as possible, like if US oil give you any heavy candlestick pattern, then trust me, it's definitely going to go to that direction. That's why whenever I get a close below any of their key levels, I just get out immediately. Some will say you are trading with fear, but that's not true, because if you were in this market with let me say 0.5 lot size, you probably made, of I believe you will secure over $500 in this market. So that's simply pretty much it about how I trade this market. I always trade breakouts and retests. So whenever I get my breakout or retest, I just jump into the market. So you see, the market successfully came over here, broke above it, and then immediately fell below here. For me, based on the way I trade, I'm considering getting out of the market now, because I've traded this market repeatedly, so I know a lot of the candlestick patterns are actually influencing the most. So just follow those rules that I gave you earlier on whenever you're trading US oil. It's pretty much simple. If you already have a strategy that you're using to trade other pairs, it's simple. Implement same strategy here. It's going to work out for you. Just follow the rules and always keep your eye on the news. That's pretty much all I have for you in this video. So with that already said, hello guys, so if you find this video helpful, don't forget to smash that subscribe button, like this video, and tell me what you feel down in the comment section.